Hey, so you see a stock like Joby Aviation absolutely screaming higher, and the first instinct is to jump in, right? You feel that FOMO, that fear of missing out on the next big thing. That is, without a doubt, one of the fastest ways to destroy your capital. The solution isn't to ignore it, but to have a framework, a plan, before you even think about clicking the buy button. Look, if you're really in a hurry, here's the single most important thing you need to know right now. Joby's long-term story is incredibly compelling, but its short-term chart is flashing major warning signs. Buying at these levels is exceptionally risky, period. Alright, and for those of you sticking around, my name is DataCat. For a long time I was an analyst. You know, the guy buried in spreadsheets inside a big Fortune 50 company. I eventually traded the corporate life for this. A keyboard and a mission to cut through the market noise with data, not hype. This channel is new and I'm building it from the ground up. If you find this kind of no-nonsense analysis useful, a quick click on the like or subscribe button goes a really long way. It helps a ton. Okay, enough of that. Let's get to the real value. So, we need to separate two things: the story of the company and the behavior of the stock. They are related, but they are not the same thing. First, let's understand the story, because it explains why there's so much excitement. Joby Aviation is a leader in a field called urban air mobility, or UAM. The simple version, flying taxis, specifically electric vertical takeoff and landing aircraft, or eVTOLs. Think of a quiet electric multi-rotor helicopter that can hop across a city, bypassing all the traffic on the ground. This isn't science fiction anymore. It's an industry on the verge of becoming a commercial reality. And this directly affects how we'll think about transportation, and by extension, where massive amounts of capital will flow for decades. What Wall Street is waking up to is that Joby isn't just another company with a cool prototype. They are methodically de-risking their path to actually making money. First, they have a clear lead in regulation. This is the boring part that actually matters most. Getting the FAA in the United States to certify a brand new type of aircraft is a monumental task. Joby is in the advanced stages of this process. They're like the cat that figured out how to open the cabinet where the good treats are kept. The other companies are still just meowing at the door. And recently we got two huge regulatory tailwinds. Back in June, the government announced the FAA will start using AI to speed up waiver reviews. This cuts down the time and money burned just waiting for paperwork. More importantly, they're moving to standardized rules for beyond visual line of sight operations. An air taxi service is, by definition, a BVLOS operation. This provides a clear regulatory highway for Joby's entire business model to operate at scale. Second, they are actually building the capacity to manufacture these things. They've doubled capacity at their California facility and started production at a new plant in Ohio. This is the crucial step from being a research project to becoming a real industrial company. And this isn't just about building factories. They're hitting major operational milestones. Just on June 30th, Joby confirmed they completed their first piloted flights in Dubai. This is a massive proof point, keeping them on track to launch actual passenger service in the Emirate by 2026. And third, look at their partners. This isn't a startup going it alone. They have Toyota, a global leader in manufacturing, helping them scale production. And they have a partnership with Delta Airlines. This is critical. It creates a built-in customer base, integrating their air taxis into existing travel networks, especially for those high-value airport routes. It builds a competitive moat that's very difficult for anyone else to cross. So, when you hear analysts talking about a potential trillion-dollar market by 2040, Joby is positioned as the current frontrunner to capture a huge piece of it. The fundamental story is frankly excellent, okay? So the story is great. But your brokerage account doesn't care about a great story if you buy at the absolute worst time. Let's look at the data on the chart. What we are seeing here is a parabolic rally. The price has gone nearly vertical on a massive surge in buying volume. This is the market aggressively pricing in all that good news we just talked about. But here's the problem. Look at these indicators down here. The RSI is at 86 and the MFI I didn't show in the chart to avoid confusion is at 95, an alarming signal that the stock is in deeply overbought territory. Think of it like stretching a rubber band. You can stretch it really far, but at some point it either has to snap back hard or you have to release the tension and let it rest. This stock is a very stretched rubber band right now. So, what do? This isn't financial advice, but here is a framework for how to think about it based on your position. If you already own the stock, first, congratulations. The trend is your friend and you've been on the right side of it. But this is a time for disciplined risk management. Adding more to your position up here is chasing. It would be prudent to consider a stop loss. For example, a clean break below the 20-day moving average, which sits around $12, would be a clear signal that this intense short-term momentum has faded. If you are looking to buy the stock, patience. Buying now is like jumping onto a train that's already at full speed. It's dangerous. A more disciplined approach is to wait for a pullback. A dip to the prior breakout area, somewhere in the $10 to $11 range, could offer a much better risk-to-reward entry. You're waiting for the rubber band to relax a bit before you try to stretch it again. And if you are a skeptic thinking about shorting the stock, I would be extremely cautious. Trying to short a stock with this kind of powerful volume-backed momentum, well, it's a bit like trying to put a cat in a carrier when it absolutely does not want to go. You might eventually get it in there, but you're likely to come away with some serious scratches. A much higher probability strategy is to wait for the trend to show clear signs of breaking down first. So, to wrap it all up, Joby Aviation is a fascinating company with a powerful long-term growth story and a clear leadership position. But the stock's current price reflects a huge amount of that optimism already. The data suggests that caution is warranted in the short term. My goal here is to give you the full picture, the narrative and the numbers, so you can make a more informed decision for yourself. Don't forget to share your thoughts in the comment section. And if you like this kind of content, please smash that like and subscribe button for me. That's all for today. I'm DataCat. Happy Friday. See you in the next one.